Sharia financial principles of Sokok. Take a close look at the distinctive characteristics of Sokok, comparing Sokok with bonds and shares. And finally, we will discuss about sovereign Sokok. Okay, let us begin with the definition of Sokok. Sukuk is a representation of assets in a negotiable securities. It signifies legal instrument, debt, or a check. It is an Arabic name for a financial certificate which can be taken similar to a bond. As I have read in the history, Sukuk has two phases in the history. In the modern Sukuk or contemporary Sukuk, or just the old version Sukuk. Historically, Sukuk was issued at the 7th century in the first time in Damascus, the era of Abbasid state. But in the contemporary Sukuk, it started after 1988, when the OIC Academic Fiqh Academy was legitimized Sukuk and regulated with them.
Repeat that. In the historical sense, what was it?
In the historical sense, Sukuk was issued first at 7th century. It was at first time which was issued Sukuk in the all in the tradition, old one. But in the contemporary or modern Sukuk, it has been issued 2000, 2001. Firstly was issued by Malaysia, then Sudan, then it became international recognized type of financing.
Okay, well, let's look at it again. The word Sukuk has never been used before the 3rd century of Islam, 3rd century of Hijrah. There was a document issued at the time around the year 50 of Hijrah. That was the time of either Yazid or Muawiyah. It was still Muawiyah, because Muawiyah ruled really for 40 years, 20 years as a governor of Damascus, and 20 years after the death of Ali, he became the Khalifa. And Aisha died in the year 55 or 56. Okay, the governor of Medina issued what you call them sovereign sukuk. So this is the 7th century that you are referring to, because 7th century was still at the time of the Sahaba. So this the governor of Medina, and then he was Abdul Malik ibn Marwan, who became not Abdul Malik, Marwan ibn al-Hakam, his father. He became Khalifa after Yazid also in Damascus. He took over, and then Abdul Malik, his son, took over after him. So Marwan ibn al-Hakam, who is disputed whether he is a companion or not. Some people say, no, he has never become Muslim during the life of the Prophet Muhammad sallallahu alaihi wasallam. He knew the Prophet sallallahu alaihi wasallam. He met him several times, but as an unbeliever, not as a believer. So, because that then doesn't cover him as a companion. And some other people say, no, he was a believer. He met him as a believer. Anyway, but Marwan ibn al-Hakam issued what you can call them today sovereign sukuk. Sovereign sukuk were simple IOUs without the use of the term sukuk. The word sukuk was not there, but it was used shahada or document. And these were and only IOUs sovereign sukuk, because the government, the tradition that started at the time of Umar, was distributing to every newborn 100 dirham per year, and distributing also other commitment for the poor and others and so on. And for in fact, everybody in Medina, there was a salary that was given grant by the government. So the Marwan ibn al-Hakam issued for these grants document that I owe you this amount, it is payable on this and that date, on such a date. Because if you remember, from the time of Umar ibn al-Khattab, he made what is called the Dawawin. Dawawin means the records. He recorded the population of Medina, recorded every child and every adult and everything. So the record showed to whom there will be a regular yearly payment. The payments were on yearly basis, not monthly. So Marwan ibn al-Hakam issued this document, I owe you and it's payable on such and such date. Now people started negotiating, trading these documents, selling them, discounting them actually with each other. And Aisha objected to that, radiallahu anha, and she had a very strong statement against them, and she forced Marwan ibn al-Hakam to withdraw. I think she wrote even to Muawiyah in Damascus and so on. She made a big fuss about it, and she told him this is riba and this cannot be accepted in Sharia and so on, until she forced him to withdraw these documents. They were simple IOU documents, simple indebtedness documents. This is one. Two, historically, the word Sukuk is not Arabic, it's Persian. And it is imported into Arabic, but apparently it was imported either before the time of the Prophet sallallahu alaihi wasallam or shortly after his time. So it was ancient in the Arabic, but it is Persian, has Persian origin. It's not within the Arabic language derivation. You don't find it, for instance, in the earlier dictionaries in Arabic, like the dictionary of Ibn Faris, by the way. I think it is the earliest Arabic dictionary and is written by a Persian. Ethnically, he was Persian, but of course, language-wise, he was Arab. So he is the author of the earliest dictionary. It is printed, it's available in the market. It is called Maqayis al-Lugha. Now, the Sukuk were used historically in the 2nd, 3rd, and 4th century in the Islamic market, sometimes under the name Sak, plural Sukuk, and sometimes under the name Ruqa or Ruqa, plural Ruqa. Ruqa originally derived from piece. They mean piece of paper. So it was a piece of paper, but it was used exactly in the same way we use checks today. And it is the origin of the word check. You can find that. I found it myself. I checked this. I didn't depend on narration that I read. But I looked in one of the big dictionaries that you find them only in libraries. A dictionary the size of this table. The dictionary, I looked at it in one of the big libraries in America, and they even wrote it the Arabic origin with Arabic letter. They say the origin is Sad Kahf. These two letters, Sa and Kahf. So it is the Latin word, which is sek, S-E-C-K, or S-E-K. Two writings came from the word sak, and plural of the word sak is sukuk. So from this word sek, the word check came, and they were used in the 2nd, 3rd, and 4th centuries in Islam until the Crusaders came after the year 900. Crusaders, I think, between 960, 970, Common Era, and 1100 plus. About 200 years, waves of crusaders were coming one after the other. And the crusaders picked up that idea and the use and took it into Europe. So the sek became Czech, remained Czech in Latin, but became Czech in French and English and other languages. And the use of it was exactly the same. You have a current account with the banker, the sarraf, a current account with him, and he gives you these blank sukuk, blank checks. After he takes the signature, your sample of the signature. And then when you go in the market, you fill it, pay to so and so, ادفع لفلان, pay to so and sign it. Then the merchants who took these ruqa' or sukuk come to the banker, to the sarraf, at the end of the week, and they collect their money from it. It's easier way of taking because money is heavy. Yani gold and silver is heavy. You cannot walk and with all carrying these. Usually, rich people used to walk in the market with two slaves behind them, carrying their bags of gold and silver. But with this way, this use, so the idea of current account and the use of check signature, checking whether the signature is correct before they make the amount, and having the concept of current account existed in those in the major cities since that time. Crusaders took it and went to Europe, and in fact, this is also the origin of sarrafs in Europe. So the sarraf became in Europe bankers, whereas the sarraf in the East did not become bankers. Why? You are shaking your head as you know everything about it. Tell me why then. Why the sarraf in the East did not become a bank, whereas the sarraf in Lombardia and in London became bankers.
The East, they prefer trade, so they keep their focus on the trade. They didn't focus on this banking and these issues. While those, they are clever people, so they focus on the both dimensions, either to get the money from the traders and also on the other part integrating into the trade also.
Because they took the money on current account, not on current account, really on deposit. And deposit in Sharia, you cannot touch it, you cannot use it. So the sarraf in Europe betrayed that trust.
Trust, yeah.
They got money on deposits from the rich people, but they started financing it on interest, and they were mainly Jews. And the Jews have, as the Quran stated, that we don't care about the Gentiles. Gentiles is okay to take interest from them, but you don't take interest from a Jew. So they were taking interest by lending this money that accumulate with them, and they noticed they are not withdrawn quickly. So they started using part of it for financing on interest the lords and landlords and the rulers, because of the guarantee. They have better guarantee. And then when they found that as a lucrative business, they started attracting deposits by offering also interest. And then they became bank. I argue, that's my hunch only, that this curse of betrayal of trust remained with the banking system that is based on interest. And this is why probably we have a crisis one after the other caused by the banking system, because it is based on mistrust, not on trust, really, the opposite. It is based on betrayal of the trust. They betrayed the trust that was planted into them, and then to collect money. Getting money was more important to them than honesty, because they were not supposed to use them. The sarraf in the East did not use these funds. for two reasons, obviously. One, betrayal of trust. These funds are wadi'a, and you are not permitted to use it, being a wadi'a. And the second is that interest is prohibited, of course. If they use it, they can't use it on interest, and they want to keep it cash because they may be withdrawn or asked for by the depositors at any time. So this is the historical part. The new issue. Okay, the claim, all Malaysian writers claim that the first Sukuk were issued in Malaysia. That's incorrect. They have issued bonds in Malaysia, yes, and the bonds that were issued in Malaysia, all of them have Sharia problems. Yani some of them very serious Sharia problems, and some lesser Sharia problems. The major bonds that were issued before the year 2000 were the bonds issued by the government when they called it Islamic, and they have variable interest on it. We will give you increment, give us the loan, we will guarantee the principal, give you increment, and the increment will be determined according to either the rate of increase in taxes, that is the revenues of the government, or the rate of growth of GDP. So we give you an amount based on either. This is variable interest. This is not ribah in Sharia. Definitely it's haram. And the moment you guarantee the principal means any increment becomes not due, because guaranteeing the principal transforms it into a debt, and a debt does not grow, and any claimed increment on a debt is what is riba, no doubt about it. So this is what was done before the year 2000. In the year 2000, the word Sukuk started, and it started in the meeting of the OIC Fiqh Academy, which was held in Riyadh in August, sometime in August. I forget the date. You can find it on the internet, because all dates of the meetings are there on the Fiqh Academy. I was asked by the program committee of the Fiqh Academy to present a paper on Sanadat al-Ijara, based on my book Sanadat al-Ijara, which was published in 1995 but written in 92. Published by IDB. Now, this paper, during the meeting, one of the ulama, and I remember, we were sitting like this in rows, several rows, and one who was on the left side row. And suppose this is the podium and the presentation and so on. So the person was like that, like Abdul Rahman in that area. And he suggested that why don't we call it Sukuk instead of Sanadat? Because Sanadat the word Sanadat has the connotation of interest. And these are not interest, these are based on Ijara. So why don't we call them Sukuk? And of course, I am as a presenter of the paper, and I was on the podium, and also everybody agreed on this suggestion. And from then onward, we went on the word Sukuk. So the word Sukuk in the recent use was not there before the meeting of the OIC Fiqh Academy in the year, although in the first page of my book, Sanadat al-Ijara, I defined Sanadat al-Ijara, these are Sukuk. The word Sukuk is mentioned there, in the definition of Sanadat al-Ijara. Sanadat al-Ijara are Sukuk in Arabic, it's written there. Now, the word Sak is known and used all over the Arab countries, especially in Sak al-Zawaj. Almost every Arab country uses the word Sak al-Zawaj, that is the marriage certificate. They use the word Sak. That they don't use Shahadat Zawaj, for instance. In Syria, in Egypt, in Saudi Arabia, in the Gulf, in almost all Arab countries, they use the word Sak. and they consider even there that the word suck is more prestigious, يعني better than the word, any other word. Okay, so the word was known, but was not known for finance. And the first use, modern use for finance was came from that meeting of the OIC Fiqh Academy. And the first sukuk that were issued based on this idea were sukuk al-ijara issued by the government of Bahrain in the year 2003, advised by the Sheikh Abdul Sattar Abu Ghudda, rahimahullah. It was on his advice, and on his, I should say, ill advice, because he made them ina. That they sold 15 buildings to the sukuk holders, and they buy them back from them, and that is ina, as determined later clearly by the OIC Fiqh Academy. OIC Fiqh Academy said this is pure ina and this is pure interest. So this is the modern story of sukuk. Then the idea of sukuk traveled to Malaysia, and not before to year 4 or 7 even, that the first sukuk were issued in Malaysia. Before that, yes, they issued bonds, and they were interest-based bonds in reality, not Sharia compliant, although they were called Sharia compliant. Yani like what we have here, these ijara sukuk that are issued by the Islamic banks here. The 5 is not the 4. I know the 4 they do, but I don't know about the 5th. The Black Bank, if they issue also sukuk, probably they do. But the other 4 banks issue sukuk based, call them sukuk al-ijara. Sometimes they call them ijara certificates also, but they are interest-based really, because they are ina. 3 months sukuk, we got the same asset and recycle them every 3 months. So the clearly recycling of the same assets, and only a cash transaction, cash now for a larger amount of cash after 3 months. That's all what it is. So this is the sukuk. Now we'll see the kind of sukuk that we will discuss, inshallah. Okay.
First, I have a few questions. First one is, did Marwan charge any interest on the?
No, it was only an IOU, but people were charging interest when they started circulating them. They were selling them at less than the face value.
Okay.
Yeah. So they were selling them at less than the face value, and Aisha radiallahu anha objected to that very strongly.
So second one, you told about the ijara sukuk, that the way it is happening is not correct. What is the correct way of ijara sukuk?
I didn't say about ijara sukuk were not correct, because they were not ijara sukuk that were issued in Malaysia. They were really bonds, government bonds. Give us money now and we will give you, and they call them Islamic bonds. And we will give you an increment determined according to the growth of GDP.
For example, the Turkish banks you talked about.
Oh, the Turkish banks here, they call it ijara, yes. So they have set of assets, take the headquarters of the bank itself. So they sell it to the sukuk holders and collect the cash, and then rent it for 3 months at an annual rate of 14 or 15%. And then at the end of 3 months, they cash them to you back, along with the rent payment. And then they sell them again by a second issue, same building will be sold again, and so on. So these are not really, these are, according to the decision of the OIC Fiqh Academy, the increment is interest, although you called it rent. It's not rent, and this is interest.
How would a proper sukuk ijara look like? I mean, it has to be new.
We are coming.
Okay, we have to come on.
This is the main issue that we will discuss.
Sukuk are financial instruments similar to bonds and shares that are compliant with Islamic law. Our next slides will explain the difference between bonds, Sokok, and shares. Since their inception in 2003, Sukuk markets have experienced dramatic growth rates, attracting the attention of investors, analysts, and researchers alike. According to AWOFI, Standard 17, Sukuk.
It may be a good, really, PhD dissertation to collect information about all sukuk that have been issued since the beginning, including the pre-sukuk era, and look at them, how much are they compliant really with Sharia or not, all sukuk, and classifies them, give them some Sharia evaluation, and look at their performance really, and maybe study the reasons why the violations of Sharia existed in them. What was the objective of these violations? And what kind of violations? I think it would be a very good subject for a PhD dissertation.
According to AWOFI Standard 17, Sukuk are certificates of equal value representing undivided shares in ownership of tangible assets, products, or services of the assets of particular projects or special investment activity. However, this is true after recipient of the value of the Sukuk, the closing of subscription, and the employment of funds received for the purpose for which the Sukuk were issued.
Now, let's analyze this definition because it is important. Okay, represented equal value. They are certificates of equal value representing undivided or what?
Shares.
Okay. Shares in the ownership of the word tangible here really has no meaning. It could be really a patent only.
Of assets, yeah.
So the word tangible is wrong, and I think it didn't come in the Arabic. It came only in the English, in the translation. This is why, I mean, depending on translation, sometimes may be very misleading when the original is written in Arabic, and then so tangible makes no sense because there's no reason that it should be that tangible. It could be intangible. So in the ownership of assets, usufructs or services. Usufructs and services are not tangible anyway. Yes. But there are other assets like patents that are not usufruct and not services. They are rights.
Copyright.
Yeah, like copyright. Okay, so this is it. Well, notice that second statement, or in the ownership of a group of assets of a particular project or investment activity. Now, this addition is interesting and is really need to be thought of and find an excuse really and justification. Why did AWOFI add it? And I think it added it rightly also. Because here is the example of it. You have a company, and the company, say IBM, wants to make a project for 5 years to produce, say, 30 million computers with lesser qualifications but very small price, so that they can sell them, say, for $50 each to spread them really in Africa, for instance. So this is a kind of special project. For this project, IBM issues Sukuk for 5 years, and here is the plan, and you become owner of this group of assets, machines and raw materials and everything, and rights also, patent rights, etc. That the project is to produce these 30 million or 50 million, say, computers. Okay, so this is in a special business activity or project or so, and you own that. The idea here also is to distinguish between Sukuk and shares. Sukuk have an exit. Shares don't have an exit. So, because these are like shares, in fact, exactly, but they are shares for 5 years only. So there is always an exit in Sukuk. So from this definition, then, one, we need to realize the exit in Sukuk. It is an investment tool, not really a tool for establishing business. A tool for establishing business, you issue shares. But this is not a tool for establishing business. It's not shares. It has that concept of being temporary. It has an exit all the time. The exit could be in any way. In usufruct or services, by definition, the passage of time is the exit, right? The moment the time is over, خلاص, the sukuk has no value whatsoever. So in my book, Sanadat al-Ijara, up to this or there, or in the ownership of a group of assets of particular project, that is not dealt with in that book. But the sukuk of usufruct and of services and of assets are mentioned in that book. And in fact, the distinction between usufruct and services is taken from that book. Yani Awofi took that distinction from the book, that a service is where the utility of an asset in addition to human input. It requires these two together, or at least it requires human input in it. Whenever there is a human input in it, with machines or without machines, then I called it service, and I defined that in that book, Sanadat al-Ijara. It's not translated. So if you want to know about it, you have to learn Arabic and read it in Arabic. Okay? Sorry for that. But anyway, the knowledge really, now the accumulated knowledge in Islamic finance is being integrated Arabic and English. So practically everything also exists in English, although some of the original works exist in one of the two languages. So here, the idea then of having always an exit, the idea, and that distinguished them from the shares, he said earlier, similar to bonds, in a sense, because that similarity, what was missing at the beginning. Take the time sequence. Islamic banks, the first Islamic bank was established in 1975. Then we go into the 80s. The major problems of Islamic banks in the early 80s was that we have excess liquidity. We cannot throw our money in the market because of the trust. And we need collaterals. So we have excess fund. How do we use this excess fund? We need tools for liquidity management. So that cry for tools for liquidity management was very strong in the whole 80s until the beginning of 90s. So the idea of Sukuk came honestly by me. There is only one reference to Ijara certificate without any definition by Dr. Ma'bad al-Jarhi in his paper in the early 80s. So 10 years before I wrote, there was a mention of Ijara certificate, but without any definition. What are the Ijara certificate? There is nothing about them. In my book, Sanadat al-Ijara, I started from the idea that we want to find an alternative of bonds. This is why he wrote similar to bonds, and I accepted this word. I wouldn't object to it, provided there is a but after it, as he did, but they are Sharia compliant. So they fulfill the function of a bond in liquidity management, but they are Sharia compliant. To do this function, you need really two conditions, or probably three. One, some kind of security of the principal. So the principal should be one way or the other kind of guarantee. Okay. Two, you need definite return. The bond has definite return. Okay, so you need definite return, and with, of course, definite time when it is paid. And three, you need negotiability to be able to sell it in the market. Okay, so this is where the idea of Sokok al-Ijara comes, that only Ijara can fulfill that. Ijara, when Ijara is, take the simple example of assets, like this table, for instance, or 1,000 table like this, or school equipment, university equipment could be issued as Sukuk. The Sukuk owners own them, they collect rent on them, they are committed to a longer period of purchase. They are being purchased piece by piece over 5 years. So they are the commitment to buy them at a given price, which is usually normally the cost price, is there. So you have kind of guarantee of the principal. Is this guarantee fully complete, very strong? We can discuss that. Through insurance, it can be made really very strong. But without insurance, no, it is not that strong. Because the commitment to pay you a given amount to buy the asset has definitely a condition, provided the asset exists. But if the asset does not exist, I cannot buy it. I will buy something that exists. And that is a big difference between Islamic Ijara and conventional Ijara. In America, you pay the installment of Ijara even if the car is destroyed, is taken total. An accident total the car, and you are required to still continue paying the Ijara installment. If there is no insurance, and if there is insurance, until you close the gap between the amount paid by the insurance and the due principal. Once the gap is closed, you don't pay anymore because they got the rest, the remaining money from the insurance company. But if there's no insurance, you have to continue paying definitely, even without the asset. But in the Islamic Ijara, you are paying for the asset. And if the asset does not exist, then, so the guarantee is almost 100%, but not really fully. Take an example where the insurance does not interfere. Like the government takes that property to build a road, and they don't give you the payment that the government paid is not really adequate to cover all the principal of both sides at that time. So both sides lose. And there are cases, yes, definitely, that are not covered by the insurance and that give you that risk, which is minor, but it may happen. And this is where really we need to, this is what confirms that the Sukuk represents ownership of the asset, not a pure debt. If it were a pure debt, then the debt has to be paid back. So they are not really a pure debt. It's not a commitment on the buyer that has to pay the installment that you agreed on. They have to pay it, provided that the asset exists. But if the asset does not exist, they are not required to pay. So this is an important point in it. So here, when we talk about Sokok al-Ijara, then they fulfill that idea. The idea that here you have almost guaranteed income, almost guaranteed principal, and it is at the same time negotiable. Look at the bond and the common laws. The bond is guaranteed income, guaranteed principal and negotiable. So here we got almost guaranteed income, almost guaranteed principal and negotiable. Why almost? Because Sharia does not allow the 100% without almost. Almost because it represents an asset, and then it is exposed to whatever risk that the asset may be exposed to. And this is a major principle in Sharia. Notice the ownership here. You see the ownership where it is with us. Wherever we go in Islamic finance, the ownership remains with us. This is when we talk about theory of ownership of Islamic finance. Really, it makes, and you find it carried over throughout without any exception. You cannot earn without owning. The period. You cannot earn in Sharia financial, talking financial. You cannot earn without owning. Okay, you earn as labor. You go and work as an employee anywhere and you earn for that. But we are not talking about that. We are talking about finance. So in finance, you cannot earn without owning. It applies here. So the idea then of Sukuk al-Ijara came really as an alternative to bonds. We need something that has the characteristic of a bond, but it is Sharia compliant. So it is right to say similar to bond, but they are Sharia compliant. Okay.
A need for Islamic security or finance, high demand and expanding. Islam offers guidelines for ethical economic system. It is universal and better. It means realistic and moral. Human right to make finance and economy in compliance with faith or Sharia.
Do you have any comment on any of these 4 points?
High demand for the Sukuk.
Yeah, well, definitely there was high demand, and there is still. I remember in the many meetings in the between 2005 and 2012. I attend many of these commercial meetings, especially that they are invited by those groups that create conferences and networking that we need to. And the most important thing is network and making contracts and making friends among the other executives and so on. I attended many of these meetings in between 2005 and 2012, approximately. But during all these meetings, you will always notice that, well, the demand is, there's no secondary market of Sukuk because everybody who buys the Sukuk holds on to them, don't want to sell them because the demand is still higher. So, yeah, and there's some estimation, someone who is not Muslim, I mean by name, and I know him, and he's not Muslim, a European man who works in Islamic finance also, sent me a Eid greeting last Eid after several years. He probably remembered me after. So he said, let's send one to Monzer. He sent me a Eid greeting. I remember him saying that the demand is at least 50 times the amount of Sukuk that are in the market. He repeated that more than once in several meetings. So similarly to that, the demand has been always higher. And almost in all countries, even until today, the demand is still higher than the supply of Sukuk. And each Sukuk that is issued, you find it subscribed several times over.
Why Sukuk? The need for Islamic security, liquidity management, and investment with fixed income. Financing big projects, especially infrastructure. Creation of Islamic secondary market. Financing outside the balance sheet, enhancing capital market. These are the reasons why we need Sukuk.
Finance with fixed income. That you can do it easily. Murabaha is financed with fixed income, is it not? So it is, Ijara is also financed with fixed income, but to add to it negotiability, that's a difficult thing. Because Murabaha and Ijara themselves create debt, and the debt is not negotiable. So you need to add the concept of negotiability here. And that was important, and it is important for liquidity management, that it should be tradable, and yet it has that kind of fixed income. Can we issue in the market commercial papers, Islamic commercial papers? What do you think?
Yes, we can, but tradability.
But they will not be tradable. Yes, we can. Anyone who holds them has to wait until maturity and collect them on. But and they may serve certain objectives also in the market. Yani it's not wrong to have that. They have some objective. Some investors may like them. After 6 months, I pay now $1,000, and I will collect 1,010 after 3 months or after 6 months. It could be commercial papers that are Sharia compliant. They are not representing debt, rather they represent debt, but not resulting from a loan, from giving money. They result from a real sale transaction. So through you can definitely do that. And you can make them variable. Sometimes you will make them also of equal values. That I won't suppose I have a $10 million sale, buying fertilizer, selling it from producers, selling it to the farmers, or to a farmer cooperative. So the 10 million is one transaction. I may collect several promissory notes from several people on wakala basis. Each one give me 100,000, so I take from 100 persons, each 100,000, collect the 10 million, buy the asset, and issue the commercial papers for, suppose for a year, then issue them for $11 million. So each one will get, instead of the 110 the commercial paper with face value 110, and that can be done, right?
But the cost of issuance will be, I think, higher. Keeping it with the time span, for example, 1 year, but the cost of issuance might be higher. You have to advertise, you have to get credit rating.
That's right. So the net revenue may be only 7%, not really 10%.
That would be
Yeah.
Professor, I'm still unhappy with the idea of guaranteed buyback. You know, it makes it look like enough.
Wait, there is no buyback concept. Buyback is ina. And buyback, don't ever repeat that word. It doesn't apply. It applies, unfortunately, in many of the sukuk that were issued by those crooked mashayikh, approved by the crooked mashayikh. But the idea of sukuk, as I adopt it, as I publicize it, does not have any concept of buyback. There is a concept of buy, but not buyback. That is, a company wants a new headquarters or a new plant. They issue sukuk, take wakala to build it, of course, contract the builders and so on, and build that new headquarters or plant with the promise that I'm renting and buying them from the sukuk holders. There is no buyback. I didn't sell them the assets. But the moment we start from I sell them the asset, any buyback is ina, and any buyback makes it not Sharia
This was my point. I mean, if we do ijara sukuk with existing assets, this will be a buyback. If you have an existing asset, you sell it and you buy it. Unless you are creating new assets.
You have existing asset in the ownership of the obligor. Yes. But when it is in the ownership of Mirza, I am buying from Mateen this high rise. Inshallah, you'll be owner of a high rise. Why not? Okay. We buy from Mateen this high rise. And I need it, and I negotiated with him for it. Then I come to you guys, issue you Sukuk, and I take wakala from you. Buy it on your behalf, you own it, and I give you a commitment to buy it over the period of 10 years, and while buying also, that is rent to lease, ending with ownership. What is wrong in that? Here, there is a real change of hand. Probably you should look at the paper, which is, I recommend that everyone should look at it. It was published in the Journal of King Abdul Aziz. This paper of that is called a true sale is not a true sale. It is claimed to be true sale to fulfill the condition of Sharia, but we found that it is not really a true sale. So in fact, it does not fulfill the conditions that are required in
Hiba Saudi.
Hiba Saudi, yes. She is now completing her PhD. She sent me a question, part of questionnaire, which I told her, so sorry, I like her, she was my student, I like her, she is intelligent, she is good, but in my opinion, I object to the subject that she selected for her PhD, and also to her supervisor, whoever is he, who accept this kind of trash subject. And in my opinion, this is trash. I told her I wouldn't accept to participate in this. Sorry. Yeah, and I felt sorry that I really declined her request, because she is dear to me. She is a good student. Now, the subject she selected is the Kahf Sokok. Now we come to Kahf Sokok. How could it be Kahf Sokok and Kahf, what they call it on the internet, the crowdfunding? I looked at the internet. There are two companies that make crowdfunding under the claim of awqaf, but these are pretend awqaf, and they are really thieves. These two companies, clear, in my opinion, they are only thieves. And they say, oh, we issue crowdfunding awqaf. I told her, sorry, I cannot really accept to.
But crowdfunding is just technology. You are using, still there is money.
They are using it for the bad objective, for creating fake awqaf. That's which I did not. One of them is this, it's a famous company, has the letter F, F and N and R. These three letters are Pantera. Yeah, one of them. So look at the awqaf. At the awqaf website that they made, in my opinion, it's a pure theft. I don't accept it. So, I know there are Sharia who can share this theft with them, and they can approve of that. Crooked Sharia advisors. There are many of these. Alhamdulillah. I always give the example. They found in America, including the highest one. What was his name? His top cardinal. The top one in America, in New York. He was the Pope issued against him whatever this decree, which I read was described in the newspaper, that this means that he can never be accepted to repent. Yani no repent can ever be accepted from him. So definitely he's sent to hell completely, according to the Pope, because of the abuse of children. So I always said, well, to find some people among the Christian, the Catholic priests who abuse children. And this one, the Cardinal of the United States, the highest Catholic person in the United States, was convicted of that, not accused, rather convicted. But he was not put in jail because they are more than 25 years old, these, all these crimes. So the Pope issued that against him, which was the strongest. They said in the paper, this is the strongest ever decree issued by the Pope against any person.
Are you issuing a similar fatwa decree against the crooked?
No, I don't issue fatwa for that, but Allah will take care of it. I am convinced of a thing that is mentioned in the Quran, that وَأَمَّا الَّذِي يَنْفَعُ النَّاسِ فَيَمْكُثُ فِي الْأَرْضِ. And in fact, today I came to my mind that how do you translate sustainable? Sustainable is makif in Arabic, right? Probably this is the best translation for the word sustainable is makif, something that stays forever. وَأَمَّا الَّذِي يَنْفَعُ النَّاسِ, and I derived it from this verse really, فَيَمْكُثُ فِي الْأَرْضِ. So what is really beneficial will remain. And what is not beneficial, what is wrong, what is fake, will with time will disappear. The first part of this verse is هو يا علاء فأما الباطل فيذهب جفاء. Jufa'an means evaporates. It evaporates. The wrong thing will evaporate, and what is beneficial will be sustainable on the ground. So it will be beneficial. I'm convinced of that. So I don't need really to defend myself. I don't see there is a need for that. No, anyway.
But Professor, this will cause a lot of damage in the short term.
Yes, it's unfortunately. That is why I shout as loud as I can shout. But I cannot do beyond that. I am an individual.
Because most people have this mentality that because the Sharia scholar has approved it, it should be fine, and they just go and invest without really doing their homework.
Tell you honestly, what happened? In, sorry to say it, even specific, in Jaiz Bank in Nigeria, I am the head of the Sharia board, and as such, we got the management wanted to invest in some sukuk we issued recently in Nigeria, approved by their Sharia board and whatever. And when we studied them, my opinion was not, and other members also agreed with me. And other members know now clearly in their mind the difference between Sharia compliant and these fake and all these, the buyback and all these arrangements. So we took the decision that no, we don't allow the management to invest in these sukuk. They did that. They abide by our decision and they accepted it. There is another company which I advise also in Nigeria. And when we told them similar things to similar situation, again, they abided by it and they did not invest in them. We told them, okay, yes, they are approved by their Sharia board, but their Sharia board is wrong. And this is where they violate even the OIC Fiqh Academy. So what if the Sharia board, and if the Awofi said that, and now we will see why Awofi got 9 kind of sukuk. Why? Notice, the idea of sukuk is not to have an alternative of a share. In fact, even the idea of a share with an exit already exists in the Western laws. And it was practiced by some Islamic banks also, that you issue a share for 5 years, and after 5 years, you liquidate that share. And the West knows that companies always buy their own shares from the market.
Buyback.
Yeah, but there is that concept of temporary share for 4 years or 5 years, and then at the end of 5 years, you liquidate that share. So that exists in the Western world. So why do we need the other idea? Or a share for an ownership, equal size ownership in a set of properties or investment projects. You really don't need that because the concept is already exists. Do you want to reinvent the wheel? The idea is to get something new. Thanks God, God taught me that if I don't have a good idea that has value, I wouldn't accept to write a paper. I write a paper on an idea that may benefit. And this is one of them. But when it went to Awofi, I know who wrote it that in Awofi, who drafted the standard of Awofi that said, oh, Sukuk could be also Mudaraba Sukuk and Musharaka Sukuk and Muzara'a Sukuk and Murabaha Sukuk and Salam Sukuk and Istisna Sukuk. Hell to it. Why do you need Murabaha Sukuk? It doesn't make any sense because it's not negotiable. And Awofi said it's not negotiable. Salam and Istisna Sukuk are not negotiable also. And Awofi said that. So why do you need to call them Sukuk? Call them commercial papers. Because these are only commercial papers. So why do you call them Sukuk? Are you reinventing, giving a different name to the same thing that exists already in the market? Doesn't make any sense. Musharaka and Mudaraba Sukuk also doesn't make any sense. Why? So really, in my opinion, what makes sense is only the Ijara Sukuk. Because that Ijara Sukuk gives you that the missing link or the missing area. The missing area is something that has fixed income, guaranteed principal, and negotiable. Shares were not missing at all. So why making shares? Even though temporary shares. Non-negotiable share is known, Mudaraba share. What is a Mudaraba other than non-voting share? So non-voting shares exist also in the market. What are you doing? Did I mention to you that incident when we had a lecturer in IDB and one of my colleagues, I'm not sure all of you know his name. He's Pakistani anyway. No. بعدين Tariqullah Khan is Canadian, Mr. He was Pakistani, former Pakistani. So one of my colleagues with that lecture was Italian, the lecture. Of course, the lecture was in English in IDB. Because we had at our time, do you still have that?
Yes.
We invite famous people. We even invited this French economist, what was his name? The Nobel Prize winner, Maurice Allais. Yeah, Maurice Allais. We invited Maurice Allais and he gave a lecture in IDB. So one of them was this Italian, I forgot his name, famous economist. And then my colleague started explaining to him the Mudaraba. And after 15 minutes of explanation, the man told him, well, why don't you tell me from the beginning, non-voting shares, non-voting partners? And that's it. It's well known in everybody. And it existed, really. This is what is interesting, that all what we talk about it as Islamic is really pre-Islamic, existed before Islam. And what did we do with them? These are not Islamic. And this is why I wrote that article. Islamic finance is not Islamic. Really, it is not Islamic. It's something that existed before Islam. So what is Islamic about it? There's nothing Islamic about it. It's real life finance. It's more of a real life finance. So where is the Islamic thing? To say that, or in Salam, if you make Salam, then make Salam for a definite time and a definite a specified quantity and quality. Obviously, if you don't do that, you will be wrong. You will be doing wrong. But apparently, people do these kind of mistakes. And the Prophet ﷺ advised them, well, don't do these mistakes. A wise person wouldn't do them. That's all what he said. He didn't say really something that is marvelous. I mean, would you make salam without defining what are you buying, or when is the delivery? But some of these were loose in their definition. Oh, it is in the summer. Delivery it is in the summer, or delivery is in the season. The season is for 2 months. The season for date. So what is define the date that you want it. This is what the Prophet ﷺ, in order to reduce the potentiality of having disputes and differences between them. This is in fact one of the objectives of Sharia. Two things are really objectives in Sharia ruling. One, to make life easy. يعني رفع الحرج. To make life easy, make things easy, not to make them complicated. So any complication is not of the nature of our Sharia. And two, to reduce disputes as much as possible. Reduce the possibility of dispute. So be more accurate in order to reduce the dispute. And apparently, this is the advice of the Prophet sallallahu alaihi wasallam. It's not something that is really so marvelous. It's a normal advice that any wise person would realize that it is a must. It should be there. Sallallahu alaihi wasallam did not get it from out of the world. He get it really from the real practice. Some people were lousy on that, so don't be lousy on that. That's all what it says. Okay, so the
Nature of securities in Islamic finance. Basic principle: a security is only a field. What matters is what security stands for. That means if the security is bond, it stands for debts or interest based. If it is Sokok, it stands for real assets. So
now, for instance, can you accept an interest-bearing commercial paper as a collateral? ايش رأيك يا شاب؟
I think no. No.
Do you agree with him? You can accept it for the amount of the principal only, not for the amount of the principal and interest. So you can accept it for the amount of the principal only as a collateral, because we don't recognize the increment. The increment is haram, it's not recognizable in Sharia.
Benefits of Sukuk. Among the benefits of Sukuk, we can refer to this. Sukuk is tradable capital market product, providing medium to long-term fixed or variable rates of return. It's assessed and rated by international rating agencies, which investors use as a guideline to assess risks return parameters of Sukuk issue. It has regular periodic income streams during the investment period with easy and efficient settlement, and some Sukuk may have possibility of capital appreciation. Finally, most Sukuk are liquid instruments and tradable in secondary market. There is in the Sukuk market. The Persian Gulf Cooperation countries, GCC, and Southeast Asia countries are the main players in the global Sukuk market. Among the GCC countries, United Arab Emirates, Saudi Arabia, Bahrain, Qatar, Kuwait are important countries in issuing Sukuk. Malaysia plays the main role in sea region. Indonesia, Singapore also contribute to the global Sukuk market. Sharia principles affecting Sukuk and their tradability: deferred payment, say, salam, ijara, sharing contract, istisna, hawal, sarf contract. These are Sharia principles. Contract that we can apply Sukuk. Assets that can be securitized: fixed physical assets, goods, inventory, rights to a material flow, usufruct, services, composite of assets, hybrid contract.
Can you, Ala, find us a way of Sukuk that represents service? and he suggests a use of them.
Visit with the doctor, medical services.
Could be, but how about taking an example and the canal that Erdogan want to create here, and the canal will be used in the future by these major companies, right? So to finance the canal, could it be negotiate with these 10, 15, 20 companies that want to cross the canal, that we sell you now passage. The passage through it is a service, obviously. So we can sell you now rights of passages. Depend the same system of passing, including weight and the size of the ship and its weight and what does it carry. All these elements are there, and we create them into unit, and then we define unit, and they issue sukuk of high denominators for and only for these companies. Sukuk of say not less than $1 million. Take the unit is $1 million. So the million will be, suppose, is the fee for passing 2 ships in that canal. So we taking that as the unit. Of course, and we take all elements into consideration in defining the unit, and then issue sukuk only for on higher denomination, 1 million and more, and sell them to these 10, 15, 20 transportation company, sea companies that will cross that canal, including probably foreign government. We sell you service sukuk, not ownership sukuk notice. So you own the service, you have the right to pass through this of 50 times, 100 times, 200 times, whatever it is, through the canal, and then build the canal by the proceeds of these sukuk. Alternatively, we can make it also to ownership of the construction itself and the equipment, and that ownership by giving concession from the government that the land, you can use the land, Mr. Sukuk holders, you can use the land. We issue the sukuk to represent the assets, that is construction plus equipment. You use them, you own them, and we lease them from you over a period of 15 years. That's another way of issuing sukuk to finance the canal. If you want to expand this university,
but this canal, the issuance will be for a particular class of people, for a particular class of what you can say the applicant.
If
It's not for public, it should be issued for public.
No, the first kind of sukuk that represent units of crossing, unit of service of allowing you to cross the canal, these are service units, will be really issued in high denominations and only to companies. But the second kind of sukuk, where you own the canal and own the equipment in it for 15 years or 10 years, can be issued to the public, and they can make also a condition that only citizen, for instance.
First one will not be tradable. The first one will not be tradable.
Both of them will be tradable.
Then how they will lose the right?
Well, obviously, because they will lose the right to another one who will use that right instead of them.
Their tradability will be limited. The shipping company will send to the shipping company.
To other shipping companies,
But not to the public.
of course, yani, maybe some companies may like to use them because they, as investment only. Some banks, suppose, decided to buy some of these units. It is possible they may use them, and then later sell them to shipping companies because they expect later the fee of crossing will be higher. So they make profit out of them. This is also possible. That depends on how you price it. So it could be also sold to investors. But the second kind can be made in small denominators and made to the public, and they are negotiable. Okay.
So this looks like advance fee payment, right? It's almost like
It's
that.
exactly like advance fee payment. The other example I was going to mention for constructing the medical school here. The university has a medical school plan. And already يعني, had a contract with this Mediport to manage the school and the hospital. So they want to build school and hospital with their equipment. Can they finance them by Sokok? Sokok of service. That is Sokok of selling the credit hours in the medical school. Now, future credit hours, the plan is to get the building completed by the year 2025. And we say these Sukuk are usable between the year 2026 and the year 2036, for instance, and issue them as Sukuk with small denominator for all those people, especially those who expect that they have children, they will be in that age to study, may like to buy them because they are a lot cheaper than paying later the tuition. So we issue them in what you need, like 100 credit hours, for instance, the school, or 10 credit hours to make their negotiability easier. So 10 credit hours, and they will be negotiable. Some investors may like also to buy them now, because they expect that the price of the tuition will be much higher when the building is completed. Of course, this will be a good feasibility study will show that. So we can issue service Sukuk for building the medical school.
Only hospital services, because I think for tuition fees, if somebody is buying credit hours, then there is another criteria that the children must qualify some criteria to get admission.
That's right.
But if not, the children didn't, or son or daughter didn't qualify, that means the book is useless for them.
Well, they
will
don't
have to
use
sell
them, they can sell them.
They sell them. So
Always they can sell them, yes, if they don't make
But
that.
for issuing, for example, some senior citizen, then okay, you buy some book, you will get free service or marginalized service.
Yeah, I mean, okay, I think we want to extend the metro to some other stations, some other area. So you should hope to invest, to use it, and those people who hold these Sukuk can use the metro for so many number of rides. So, and the Sukuk has, you punch them that holes, you make holes on their side each time they are used. And it's like a card, yeah.
The balance in the card. Like.
Yeah. So the balance in the card is shown and becomes so no. Yes.
In Pakistan, the airtime were issued in 2014. That was a prepaid mobile card.
Mhm.
We are putting in the mobile. But it was, the underlying asset was that.
So they have issued Sukuk that represent this airtime.
In 2014.
Mhm.
Professor,
And in fact, that is an example which I gave in my book also.
how about student loans? Can we structure it for students? to
This
study?
is like a replacement of student loan. These
Yes.
are prepaid student fees. Prepaid student fees. They can be prepaid student fees. This is the opposite of student loan.
Yeah.
This is the idea is opposite of student loan. Student loan issues need to be really discussed at large. I tend, probably you noticed in my fatwa, I tend to be more conservative, not really liberal. I do not approve student loan, except in case of necessity. And necessity is very rare in student loan, especially in America and Canada. In fact, last week, I was talking on it with some people in Edmonton, some youth in Edmonton on the Zoom. And my opinion that student loans are not permissible except in a few cases in America. The alternative, and the first alternative is to be smart and take scholarship free of tuition. So if you be smart, you take it free of tuition. I got free tuition for the whole my PhD study. I paid only the first one before I got it because I did not apply in advance. I applied after I reached there, and when they asked me, why didn't you apply in advance when you were still in the master's? I told them I was afraid you may not admit me. So now I got secured the admission. I want the scholarship, but I was given scholarship, alhamdulillah. So this is the first option. Why don't you take scholarship? The second option is to work study. All universities in US and Canada have this system. And even without this system, the possibility of working and the study at the same time is harder. Yes, and if you want to be really good in both of them, that means you will have for 4 years, you will have only 5 hours of sleep a day. Well, you can survive that. Any good person with goodwill can survive that. I don't accept excuses. So this is the second option, work, study. There are programs and there are outside the program. I mean, you work at the neighborhood supermarket and study at the same time. You can do that, even if it takes you 5 years instead of 4 years. You take summer classes instead of taking only 2 semesters or 3 quarters. So you can do it without it. In the United States and Canada, you can do it without student loan. Rarely where you need student loan. For instance, you have arrangement, and for some reason there was recession or any reason you were laid off, and you have a tuition that need to be paid tomorrow morning, and you don't have money and you couldn't find it. Then take a loan for it until you manage to solve it, or some sudden change in your plan happened. And then you have a quick payment that need to be paid. Then this is, I consider it.
No, but Professor, what I'm thinking is from the service point of view, can the bank not buy the credit hours of the student and sell him the credit hours at a profit?
Excellent. We've done that. We have done that. We are doing it in Islamic banks. Okay. I suggested it, for instance, in Zanzibar and drafted the contract for it. Zanzibar has an Islamic branch of the National Bank. Zanzibar National Bank has an Islamic branch, and I suggested to them finance education this way, and drafted the contract and approved the contract, and I was the head of their Sharia board at one time.
What will be the exit in this case of student financing?
I mean, you finance the student, the bank, when the bank finances the student, buys credit hours from the university. And in fact, to buy credit hours, assign the student as your agent to buy it. You don't need to deal with the bank. Ask the student, buy it on my behalf for me. And usually what I suggested to them in Zanzibar, that we pay to the university directly. We don't pay to the student. We pay to the university, the tuition directly.
Yes.
And then we sell it to the student at the higher, depending on the expectation and the contract. This is a contractual matter. The exit will be 4 years after graduation, or his parent will be able to pay it after 6 months, or it depend on the situation. So it's exactly as you negotiate maturity of Murabah.
Like IDB is offering some funds for the students. They are saying that after getting a job, you have to repay
Yes.
in
You
5
have
years.
a program based on loan or?
It's a qard,
Qard. I know the grants, there is the grants.
There is a qard also for non-member countries.
But they are calling it scholarship.
Wait a minute, the grants is for non-member countries. Like India, we are implementing it
They also
in
have-
India, in Kenya, and other countries.
But I have one question.
Let's, okay, they also have the qard
They also
idea.
have a qard program, yes.
Well, يعني sorry to say it, to say it, but يعني it's okay.
Let's say.
I created a waqf or a trust in America. And the objective of that trust, small amount, not really, because I'm not a rich man, but with small amount. I created a trust, and the trust is to finance my grandchildren and so on. And I put it only for postgraduate, not for graduate. And alhamdulillah, in our family, we are 9 in the family, in me and my wife. Out of the 9, we have 5 PhDs, we have 2 masters, and we have 2 double bachelors. We don't have anyone with 1 bachelor at least. So alhamdulillah, yani, and I created a fund for our grandchildren. We financed, in fact, the first one. He got into the medical school, graduated from it, and now he's in the second year, finishing the second year this month. And will start in July, the 3rd year, in his training for, what do you call it, this bone surgeon.
Orthopedic.
Not for children, for adults. Yeah, it's bone surgeon. Is it called orthopedic? Orthopedic surgeon. Yeah. So this is what he is now under training for it. And he's paying really back the loan to be available to somebody else after him. So we created that kind of.
But Professor, this is interesting. This Zanzibar, you can explain a little bit more?
Yes, it's simply buying a credit card, a credit unit. That is, a student approaches the bank or his parents approach the bank, and we need financing for that. Definitely, that has to be before they buy the credit unit, not after they buy them. It could be after registration, that's okay, or before registration. And it could be also the program we made it within Zanzibar, because there's only 1 university, or outside Zanzibar. In fact, 1 student was in London that we financed. So you can take any guarantees, depending on the situation. If you need the collaterals, you can take collaterals. And because it's subject to collateral, create this. It's exactly like murabaha. It's murabaha in services. And that's permissible.
Okay, in Sharia, it's okay.
Of 100% okay. Didn't we say that the service and the use of right is a property? So it is property based, brother. It is property based.
I'm just thinking about the ownership. Are we actually transferring the ownership?
Of course, we are actually, we bought it. We bought it from the university through our agent. And then we sold it to the agent. And so we told him, definitely, before you register for the credit hours, you have to negotiate the loan with us, and we will give you then the wakala to buy the credit units on our behalf. And we made it in that program that even when it is a foreign company, a foreign university, we pay directly to the university. We didn't want to be on the safe side. We could pay through our agent, but to be on safer, to avoid any potential abuse. So we paid to the university directly. And then the maturity will be subject to negotiation, to circumstances.
We have this education policy in Kahf also. People deposit every year small amount for the education of the children.
But that is based on
The Kahf participation.
and then what we give to the
For
child.
example, the child is, for example, 10-year-old. The parents start taking this the Kahf policy for 10 years. At the time of 1920, the Kahf matures. and the amount is given to the child for education.
So what they have saved during this period?
It multiplied.
It's invested.
As invested, yes. What they have saved as invested. And so it's a good idea, takaful, but it's not really takaful.
It's a saving.
It's saving.
Babu saving policy.
So, yeah, we have it in America, 529 education. In 529, you save any person, in fact, can save for the name of that child. Whoever, it could be your child or any child. You can save for him, and it is invested in California, for instance, under the supervision of the Minister of Finance in the government of California. You know, the Republic of California is called formally. So the Minister of Finance is the head of the board of this 529. Is called the Scholar Share. 529 Scholar Share. 529 is a clause in the federal tax law. And in the federal tax law, this gives you the tax exemption. So whatever you pay for the 529 program will be tax deductible from your income. You don't pay tax on it. And also the investment return will be not subject to tax, provided it is used for the education of the child. And it applies to university level and above, not below university level. So you can, at the time of university level, withdraw that to the student. So that it goes in an excellent way, it has no problem.
The repayment from the student should be lump sum one time, or it can be taken from
any program that you make, of course, payment in what we did in Zanzibar, payment was on installment in the future. But what we did actually, we had parent financing, not really the students for tuition, but we take the financing. The parent is the payer, the obligor.
Professor, the Turkish government, DRD, have a program for their financially.
What is it?
The Turkish government,
They
have a program here.
Okay.
If you are a student, you are
Let's listen to this, please. It's important. Okay.
and you are a student, they will give you pocket money every month. Let's say 1,000 Turkish lira just for eating or for something like this. And after you graduate 2 years, you have to give them back. However, they are collecting, they are calculating inflation rate. I know a student that total of 20,000 he take. However, when he have to pay 25. They are saying this is
including the inflation rate.
this is a lot for
Indexation.
If the government is doing it, and if it is the inflation rate, is halal. If an individual does it, and if it is the inflation rate, no, it becomes interest. The government has this kind of right, whereas individuals don't have. So with the government, it took a form of a tax, really. Because the government represents the interest of all the people, theoretically at least. And the democratic government, yes, generally speaking, represents the interest of all the people. So then it has to protect the rights of all people in that. So the government, yes, my fatwa for the government, that is okay, but for an individual to say, you have to give me increment equal to the inflation rate, no.
The Islamic Bank of Thailand, we had a product for the young graduate, but it was a subsidized program from the government to finance.
In which Islamic bank?
Islamic Bank of Thailand.
Thailand. Okay.
So we were financing 1+1 apartment for the young graduates. There was a 1-year grace period. After that, it was a progressive, rental, progressive home financing. So initially it was
What do you mean progressive?
For example, at first it was the installment was 1,000 lira, and it was increasing gradually with the calculation of their salary increase for 10% per year, for example. So we were making that for 20 years. That was
So this is house financing.
house plan.
House financing and يعني house financing based on rent,
Yes, based on.
not on lending.
That was-
يعني rent ending with ownership.
Yeah.
Yeah.
The area.
Rent with, as in my opinion, it is wrong. Anything that is called rent in Awofi, it is rent with transfer of ownership, gradual transfer of ownership.
After 20 years, they would
He
be
becomes owner.
owner of.
Yani it looks that it is Sharia compliance. As you describe it, it's Sharia compliant.
I developed myself.
Really? Okay. Good.
Professor, I think we should have good time for a short break.
Is it?
Yeah.
How about finishing in 10, 15 minutes? We don't. Do you have anything important that you want to mention?
Just the kindness of Sokok is important.
Hmm?
Kindness of Sokok, types of Sokok.
Yani they come to school
Just after that.
all the time. So I think we can break now. We will break now. Distribute it to them. Yes, please.
I have a little bit ishkal. What you explain it in 1 or 2 weeks before. And the acid bracket and acid bracket.
Okay, yeah, okay, we can say it. And anyone can help us with that?
Which one?
Asset-based, are Sukuk asset-based or asset-backed?
Last time, they are asset representative.
Which means what?
They are lending the asset.
Not asset based, not asset based.
Because they are not debt. Yet, there is a commitment in them that makes them similar to asset-backed. And some of them could be asset-based. Sukuk al-Mudaraba and Musharaka, they are asset-based, not asset-backed. But again, asset representative, the commitment in them makes them similar to asset-based when they are Musharaka or Mudaraba Sukuk. The Ijara Sukuk are asset similar to asset-backed. They are asset representative, but because of the commitment in them to pay a definite revenue and a definite principal at a definite time, that makes them close to asset backed. But they are not asset backed because they are not debts.
Very good.
Okay?
But none of them are asset based. I mean, none of the Sukuk is paying from the revenues of the asset, right? All of them are backed by certain.
No. Some of them could be paying from their revenue.
From the actual rental.
Take the scope that were issued by IDB, that we have already Ijara contract, that we package them together and make them scope. And they have already contracted, there are Ijara contract in them, all of them. Suppose it's Ijara only. And we collect the Ijara from the beneficiaries and along with payment and pay the stockholders rent and principal.
But that is a sale of the existing Ijara.
That is sale of existing Ijara contract. And that is the objective of it is liquidity only. Recycling our fund to be able to finance other people.
But you said it is commitment, but not guaranteed commitment.
Yes, there
This is
is,
important.
that is the issue.
Asset is there, it
It's
will.
almost guaranteed, but not really guaranteed. It's guaranteed as long as the asset exists. And if for any reason the asset does not exist, it's not.
But if it's unconditionally guaranteed, it becomes a riba then in that case.
Yes.
It's unconditional.
Yeah.
Hybrid Sukuk was not mentioned.
The what?
Hybrid.
Hybrid sukuk is, I mean, you can make any combination of,
Portfolio or.
yeah, it could be any combination really of sukuk and will be hybrid. And the example of hybrid was objected to by the OIC Academy, the one that was done by IDB in 2003, and then they repeated it in 2004. These were packaging murabaha and ijara contract. Then when OIC Academy studied it, they said these are haram because they are not one from the other. You can package debts with ijara, but the debt should be coming from the same ijara. In a sense that the debt of future rental, this is debt, definitely. And you can put it, yes, with the ijara and package it together. But you cannot package murabaha that is not related. Murabaha with Shah and ijara with Abdul Rahman. Put them together, this is what IDB did. Put them together, 51% ijara and 49% debt from murabaha. And they packaged them and sold them as Sukup. The old thought fatwa, which was, when it was studied, it was found wrong, and the refinement came in, I think, 2013 by the OIC Academy, that if they are coming one from the other, then it's okay. The example of it is a sale of share in an Islamic bank. Now, what are you selling in Islamic bank? When you sell the share of an Islamic bank, what are you selling? You are selling its asset and plus its reputation, plus minus its liability, right? Or plus its asset market evaluation. And what does that mean? What are the assets of Islamic bank? Cash and debt, and does not have inventory.
We have infrastructure. Infrastructure, buildings.
We might be renting it. Buildings could be rented very often. Most buildings in Islamic banks are rented, but a major building, usually they like for pride to own it, but not really always. But yeah, suppose, but that will make about 3 to 5%.
The technology, the infrastructure.
3 to 5%, that's good. But you have about 60 to 70% debts that's receivable. You have cash with you or with other banks, including central bank, 20 to 30%, and you have some ijara and maybe 2% or 1% musharaka, overloaded with wrong conditions, or good musharaka, could be rarely good musharaka. So the majority really is cash, and debts make 90%. So cash and debt being 90%, is it permissible to sell them at other than face value? No, it is not. But because you are selling the whole bank, you are selling your share in the entity itself, in the legal and the social, whatever, the entity, the economic entity complete. And these are part of it. So here when we apply the principle of التابع, التابع تابع, a subordinate follows the principle in its ruling. We are selling the bank, the operation of the Islamic bank is a permissible operation. So we are selling the bank. When you sell a share, you are selling your share in the bank. Now, even if these are tabi', then they are included and sold at any price, market price, not face value. This is in contrast with making murabaha with the Shah as the example, and ijara with Abdul Rahman. For packaging them together, they don't belong one to the other. Whereas the debts in the Islamic bank, receivables in the Islamic bank, result from the transactions, the activities, the operations of the Islamic bank. So that's permissible. See the different, and this is the fatwa of 2013. I was part of drafting it. Myself, we were the two main persons who really drafted it and put our weight in it. Who was, what's his name? The one with you, the head now of the of RT, past RT. What's his name? Sami Suhail. Sami Suelim and myself were in the committee. There were two more people. One of them died, rahimahullah, but he went along with us. And the other members, and we were, I think, 5 members, went with us also. And the other member was kind of my subordinate, my student in that sense.
There is another issue of this 33%. They say if the 33% is.
That is a false fatwa by crooked shuyukh that has no sense and no meaning at all. And this comes from something that has no relation to it. Gosh, in an interest-based bank will give you a loan for the whole year for 8%. And you tell me 33% is okay? You can manage 33%. It's silly. When you are in, this is the fatwa that comes from ignorant people who don't know the real life and don't relate it to the real life. The hadith of the 33% is about wasiyah. When the Prophet sallallahu alaihi wasallam, a man, Sa'ad ibn Abi Waqqas, was about to die. And then the Prophet told him anyway, after that, no, you are not going to die now, inshallah, you will survive and you will be a leader of a conquering battle. And he was the leader of Al-Qadisiyah that opened Iraq and what is behind east of Iraq. So he had only 2 daughters. And he said, asked the Prophet when they were in Mecca, during the opening of Mecca, he got sick and he was afraid he was going to die. Should I give as charity my wealth? No. Half of it? No. Then he told him 1/3. The Prophet said 1/3, and even 1/3 is too much. الثلث والثلث كثير. So, and from that doesn't have any application in finance. And those who applied it in finance, they got, as you talk about the seeding and mix it with the fruits. You don't mix seedings with the fruit, do you? In Pakistan, you don't do that, right? Okay, so he doesn't. Not even in India.
Yes, there is a fatwa saying that you can package if it's 33% is ijara, real, and
that's worse. The original fatwa was 51%. The original fatwa and what IDB did was 49-51, 51 ijara. But a fatwa came in Dubai by this Majlis Dubai, whatever, this Suq al-Mal al-Islami, what they call Dubai. This is a crooked fatwa. This is one of these garbage fatwa.
It's called share screening criteria. Share screening criteria. In the equity market, the Islamic Sharia, there are 5 points.
I didn't understand what you mean, but
the share screening criteria under Islamic finance. So that's what the 33% is mentioned.
They use it also 33%.
33% of the.
Oh yeah, yes, that came, yes. That's a different issue. And even Awofi said 30%, not 30.
Yeah, that's
33 came in the, yes, in screening shares, whether we accepted or not. The committee that discussed for the Citibank and so on, I think for the Dow Jones Islam, they considered 33%. Then Awofi considered 30%. And we have a study in Qatar. In Qatar, we need only 0%. There is a study by this Nazar, probably complete the name, an Indian who is in Mumbai. He made a study about the Mumbai stock market, and he considered only 20% is adequate. So the idea is not really a Sharia number. It's a number of tolerance. And how do you define the tolerance? I define it here, that tolerance is the amount that gives you a freedom of action equal to the freedom that is taken by the one who is not committed to Islam. But a Muslim investor should have the same freedom. And how do you define in number the same freedom? If the index behaves the same way. If the index, okay, point number 1, Nobody invests in the 6,000 shares that are in New York Stock Exchange. And everybody select 10, 15, 100, that's all in reality. So, but when you select these 100, one person select all, among all of them with no limitation whatsoever, and its guide is the Dow Jones index. The other one want to select only Islamic. So what are the criteria that allow us to have the same kind of behavior of the index? It came really, the 33% in this committee of Dow Jones came on the basis of trial and error. It didn't come from a theoretical 33% Sharia thing.
So it's an empirical finding. It's not
empirical finding only. So they found that 33% fulfills the index behaves the same way exactly. And they made the trial really from 1929 until 1999. They took 70 years in that trial, took all this past, and they found it behaving the same, then took it there. But the study of Nazar showed that 20% is sufficient in Mumbai, 20% and even 2% as haram income, instead of 5% that they took. In Qatar, we have a study that is published, I think, in the same journal of King Abdulaziz. It is published also. And this study showed that you really, in Qatar, you need zero tolerance because there are 16 companies that are Sharia compliant, have Sharia board. Whether you agree with them or not is something different. I wouldn't say it is haram to invest in Islamic banks that make tawarruq, because they make tawarruq based on this crooked fatwa of their mashayikh. But essentially, they are committed to living according to Sharia. So it is permissible to invest in these banks, even though they make tawarruq. I wouldn't, I am not an extremist. I am not a Wahhabi at all. I am a moderate Muslim, and Sunni-centered, but more conservative, yes.
Enlightened Muslim.
Enlightened
Muslim.
Enlightened
Muslim.
Yeah, Shan, thank you. So it is permissible to invest in them, and we found in Qatar you really don't need zero tolerance in Qatar against the fatwa that is issued by, because it is not a scientific issue, by Mr. Sheikh Ali al-Qaradawi. Ali Muhammad al-Qaradawi, I think it's really more. Yeah. Anyway, Sheikh Ali al-Qaradawi took what Awofi said, 30%, and applied 30%. Well, gosh, in this situation, you don't need that. There are all, I stayed for 10 years and I was investing in the stock market and I made good money, alhamdulillah, in the stock market of Qatar. But yet, I never invested outside these 16 companies. They are distributed in all the sectors and they give you practically the same as we showed in that paper. They give you the same kind of index, same behavior. So thank you very much. And inshallah, all of you will do excellent, distribute this to everybody.
Remember, just before we close, one last thing. The tradability of Sukuk, it says physical assets underlying the Sukuk must represent at least 33% of the Sukuk stake value. This is also the same issue, or the tradability?
The tradability depends, and there are several decisions in that regard by the OIC Fiqh Academy. If the Sukuk represents utility or services, the institution must be completely built and must be available to produce those utilities or services. In other words, you cannot trade Sukuk, if we issue Sukuk for the College of Medicine here, you cannot trade it before the start of offering these credit units. Okay, so you before that they are not tradable. This is, and the same thing if it is utility. This is one. For assets, once the assets start to be physical without any limit OIC Academy didn't mention any percentage. Once they physically, there are real assets that can be traded, can be sold, like digging the assets, digging the land and to put the poles. You didn't put the poles yet. You dug the land, that is physical assets. Because the cost you put in digging the land is part of the physical assets. Once the physical assets started, then it is tradable. Before the physical assets start, when you are talking about physical building or physical roads, for instance, this is what we told in the road Sukup in Nigeria. Before the beginning of the project, actually, when the contractor brings sand and asphalt and whatever to start work, before that are not negotiable, but immediately the moment he put this on the land, they are negotiable. So there are assets to be sold, to consider the value belongs to them and the commitment that relates to them. So that's the first one. And that's the OIC Academy. There's no 33.
33 for the bundling, you know.
Yeah, this bundling, no, it's 51. OIC Academy said for bundling, it is majority 51, not 33. OIC Academy said 51 majority rule, not below the majority rule. But the idea of bundling, again, the only example of it is where? What is the example of bundling? You cannot bundle things that don't belong to each other. That's the point. You cannot bundle things that don't belong to each other. Like what IDB did. Murabaha and Ijara, putting them together, that the decision came against that, really. And that is clearly so.
What can be bundled then? Equity and Ijara or what?
Now I don't have really any. Because equity and Ijara can be bundled without any, they don't need any. But there may be some examples. Anyway, the decision says we apply the principle of tabaiyya, this tabi'u tabi', that is subordinate. We apply the same rule of the original on it, where in case of subordinate, and that is where like Islamic banks shares. If you sell the entity itself. And the decision says, in other cases, you apply the majority rule. When the rule of subordinate does not apply, you apply the majority rule. But again, it says in item number 1 of the decision that whenever you bundle together, they should be related to each other or generating from each other.
Okay, you cannot bundle different assets into the Ijara. Okay.
So you cannot bundle what IDB did, get Ijara contract and that other istisna or a debt contract, in other words, and put them together. They don't belong to each other. Okay. And I definitely wish you all success in the final exam, but please, I am sorry, I am not going to favor anyone. No one is going to get a favor, and you have to do well in the exams and in others. I noticed that there were some problems in the term papers of some of you yet, but compensated in the final exam.
How many questions? Theoretical questions? 6 questions. Objective.
I don't know yet, but I started with the Islamic economics. I put 3 obligatory questions, and I am going to put 2 or 3 will be really for a smaller part of the grade, because the 3 obligatory questions that I put for the Islamic economics, and it will take definitely more than 40%, if not 45, maybe 50%. So only 10 points remains for the other. We have that is set 40 points of the grade, 40% is for the multiple choice. So you have 80 multiple choice questions and you have 2 bonus. Also, I put 2 bonus.